Okay, where was I? All right. Getting back to the mechanics of things. Yesterday, we had a situation in the markets with Apple and with Google. For those of you who are unaware of what transpired, let me just pull up Apple for you real quick. And again, if you haven't seen my video already on I Told You So to Get Out of the Market, you may want to check that out. Okay, here's the bar from yesterday's trading on Apple. We hit a high of $291.77, and we dropped all the way down to $275. Excuse me. That's quite the parabolic move. As you can see, we came all the way down. Broke through 1, 2, 3, 4, 5 resistance areas. Alright, wiping out everything from the September the 20th move. Now, good thing we didn't close there because we would have wiped out that entire week's move. Alright, market managed to rally itself back up. And here's today's candle. As you can see, total inside day. Total what is called narrow range inside day, which means that it's setting up for a breakout tomorrow, either up or down. But still a lot of room to go inside the candle. So we need to really close outside the candle to give the market direction in this particular stock. Needs to close below this, the low of this bar or the high of this bar, sometime this week to facilitate direction in this particular equity. But I just wanted to give you another example of flash crash tendencies, fast market tendencies in a market. This is some spike, some tail, right? Well, similar goings on happened yesterday in Google. Not as bad as the Apple, but still bad enough. The high was $533.59, and we fell all the way down to $518.45. Okay. Again, you know, the markets are going to do what the markets are going to do. The idea is to understand the way they move so that you can take profits and do what you need to do. This is why I'm a huge proponent of taking profits along the way. I have absolutely no problem with getting out at the end of the day with profit. You can always get in again tomorrow. There's nothing wrong with that. All right? There's no difference than if you were to quote-unquote set and let it ride versus getting in and out. I just like to have profit booked. That way I don't have anything to worry about. You know what I mean? Booking profit. There's nothing wrong with booking profits. It's really a smart thing to do. All right? Now, go back to the May the 6th flash crash, which is this terrible bar here. Well, let's just take a look at what could have happened here. Okay. Make it so that it can be seen. Alright. This May 6th bar and the Dow, when we fell, we went to 98.40, right? If you go back here, 98.40 is up in here. Okay, that's up in here. All right, and really the low of this bar, yeah, that would be here. That'll be back on February the 5th. So we erase months of gains in one day. See what would happen if you didn't take profit and you actually got stopped out on this day? You would be right back where you were. You would have held a position for months and then only to get stopped the heck out with nothing. Break even or just a little bit of your money. That's why it's good to take profit every single day and just keep buying. You're booking profits along the way. You're just booking profits. Okay? You're booking profits. Alright, so technically speaking, you would have been out of the market after May the 4th. You wouldn't have been long if you were trading this particular security, the Dow Futures. You wouldn't have been long because the market was already telling you that it was in free fall anyway before the May the 6th. These flash crashes or fast markets generally behave in overbought conditions when a market is overbought, like here. Okay, we're overbought here. All right, getting ready to turn. So you were warned before the May the 6th flash crash. You were warned that we were in a downtrend in this particular security. So you knew what was happening before the May the 6th. So if you would have kept buying these, that would have been your own foolishness and not trading properly, okay? Or trying to be greedy. Oh, I'm buying the dips. No, you're being a dip, okay? There is a method and a way to buy dips and pullbacks, but this is what we call trying to catch a falling knife, and you'd have been stabbed to death right through your heart on May 6th. So people who got caught out there on May the 6th were the people who were ignorant of the market dynamics and behavior, and they were caught long. People who were short that day did quite well. Even if you got out on the close of this bar, and you were short from this bar, you still captured quite a bit of money. You see what I'm saying? So you just have to know how to ebb and flow in these markets. That's all I'm saying. I'm not dissing anybody. I'm just saying just know how to flow. All right? We're still in an uptrend here. We're still bullish, okay? Market is not yet corrected. It's still straight up, okay? Trying to short this is also foolish because it is not corrected yet. Thinking you're getting in early, it's just a sucker's play. And don't get me wrong. If you're going to day trade, go ahead and day trade. But don't think you're going to sit here and short this and hold a ticket overnight thinking you done did something. Because as you see, every time it goes up, it only pulls back just a little bit and then rallies again. Pull back just a little bit and it rallies all over again. So the way to prepare for the next situation is to learn from the mistakes of the past and trade what you see, not what you think. Not what you think the market should be doing. All right, there's no rule that says that this Dow can't continue to climb and break through 11,000 before we get a correction. All right, don't be afraid of flash crashes. Just be on the right side of the market, and that's it. If you've been long since this rally has ensued, then you have comfort built in. You're playing with the house's money. Anything you give back, not due to your own fault, is still playing with the house's money, and you still have time to correct and do things. So you don't have to be afraid of a flash crash. And those of you who are longer term, trader perspective guys, there are things you can do to insulate yourself too. My clients don't have that to worry about because they have me, the Vulcan. Who do you have on your side? Exactly. Anyway, be encouraged. This is an encouraging video. Just want to give you the heads up and let you know that a momentous, gigantic, humongous crash is coming. And it's going to be manufactured, and it's going to be people scared to death and running toward the exit. All right? It's coming. Because we're overbought. We can't stay overbought for so long. Even if we manage to do it for the next 6 weeks or 6 months, eventually it's going to come down. And you don't want it to come down on your head. Remember, take what you can, give nothing back. Peace.